Alpine Liquid Fertilizers is your full-season crop fertility specialist from start to finish. Visit alpinepfl.com for more.
Let's talk markets here on this midweek edition of RealAg Radio. Joining us right now is Tyler Schau from agmarket.net, based in North Dakota. Tyler, how are we doing?
Doing good. How have you been, Shaun?
Pretty good. Yeah, you have a good Christmas holiday season?
Yeah, it was good. We got to go back to Iowa. That's kind of my home country, so I got to visit family and eased our way back to North Dakota last week and got back in the swing of stuff.
Yeah, as you're talking to family members involved in agriculture, what's kind of the mood right now? What are you picking up?
It's I don't want to say disheartening. There's some worry out there. Budgets are getting tight. I had a nice long talk yesterday with a former professor that I worked with that's now working for the North Dakota soy. And, we kind of talked about this same thing, and he's kind of hearing the same thing I do for my customers. There's a group of producers out there that are sitting very well financially. They own a lot of land. They didn't go and try to grow a bunch over the last few years. And their attitude is, hey, this is farming, and this is the job we decided to do. There's some others who got a little more concern, and I understand that things took kind of a quick turn, just a couple of years ago, and a lot of people maybe weren't as prepared for that as they needed to be.
Yeah, 2025 kind of feels, like yesterday I was in the PNW. Next week I'm in Saskatoon. I think it's, you were in Iowa over the holidays. You're in North Dakota. I think it's the same vibe everywhere. And some of the pillars and the structure, the context exists for that wide geo, no matter what crop you're growing in the major broadacre row crops. Like it's the balance sheet, it's cash flow. It's kind of weathering a period here. It's not where you're like, adding to the trust fund, but you're trying to get to the other side of it. And depending on what your strategy's been the past 3 years, it's really dictating how you feel today about the next one or two.
Yeah, and I don't want to get too nerdy here, but bear in mind I taught economics and finance for several years. And one of the things I used to tell my students was, when it came to all the financial benchmarks, when it came down to it, the most important one was working capital, working capital, working capital. And the problem with working capital is there's not a real great measurement tool for it, right? Because it's amount of liquid assets or cash that you got available to burn through when times get tough, right? It's to avoid having to sell off long-term and intermediate assets, go deeper into debt. There are measures that we can use to define what a good amount of working capital is, but otherwise it's just a number, and it's really hard to define for each different operation what that measurement should be or what that number should be. But you come into times like these, and that's where that working capital is a really powerful tool in the producer's toolkit if they've got access to it.
Yeah, being short net working capital, being short on cash, it forces you into decisions you don't want to make sometimes.
Exactly.
Right?
Exactly.
Okay, so relative to the markets, as you look ahead to 2025 here in this crop, but not even in the ground yet.
Yeah.
What are some of the indicators, or like what are some of the things that you're watching that we need to be really paying attention to, or they're the threads that are critical? Like, just let's talk about the year ahead here.
One of the things that I think we've really got to pay attention to is going to be and bear in mind, I'm in the U.S. here, but that dollar, the currency values.
Dude, we're paying attention to that too. Don't worry.
Well, yeah, you, depending on how things go, you might need to pay closer attention to that as you move forward. All joking aside, yeah, the dollar values, that's one of the things I've been saying about wheat for a long time, because over the last few years, we've seen world ending stocks of wheat drop. And for 2 decades, all that thing did was just grow. Every time we got a balance sheet from the USDA, world ending stocks on wheat just continued to grow and grow. And now we're in a 3 or 4 year span where we've seen that world ending stocks on wheat drop. The problem we've got is that demand isn't flowing into the United States anyhow, and it really isn't flowing into Canada as much as maybe we need to see it in order to really pop that those three major wheat classes higher here for us. So we really need to see some type of a sharp demand for North American wheat. In my opinion, we need to see exports pick up to where all of a sudden that might get the attention. That might start pushing some wheat higher for us, or prices higher. But until we see that in a meaningful impact, I just think we're going to be in the doldrums there. It's going to be tough to see some meaningful movement on wheat prices. And when you're staring at a 109 on the dollar index, it's really tough for foreign countries to come in and buy ours when they can go elsewhere.
And if you look at the near term March contract on spring wheat, in the last year, we were briefly at $8 on the future.
Mm-hmm.
We're looking around 588 now. So, and very much a sideways trade, looking for a direction. Well, farmers are hoping up.
Yeah, farmers are hoping up. Like I said, there's a chance of it. We're seeing some other areas of the world having some struggles. Nothing major, nothing where I would say, to go out and buy wheat or to hold on, and prices are going, much higher. There are some issues and hot spots popping up, and again, I'll go back to, I've probably said this on your program before. One of the other problems you got with wheat is, there's a crop of wheat being harvested almost 12 months out of the year now in the world environment that we're in. So, having large stocks and carryovers isn't quite as important as it was maybe 10 to 15 years ago. I'm not saying it's not important. I'm not downplaying that world ending stocks number. It's just we can replenish it relatively quickly, really all around the globe now.
Yeah. Do you think one of the issues as well is what happens on the trade front, more from a friction standpoint? I don't want to call it like a trade war, but trade conflict and how that potentially impacts U.S. exports?
That's one of those balls that are up in the air that, depending on how you want to look at stuff, you come up with a new idea of what's going to happen almost daily. Yeah. We live in a soundbite world now, right? Where a president or a soon-to-be president says one thing, and that soundbite gets blasted out all over Twitter and news briefs and press conferences all over the world. And some of it could be saber rattling and rhetoric, just to try to get what we want done. But some of it's going to be, it's likely we're going to see some type of a spat. I guess in 2 weeks we're going to have a lot better idea of what to look forward to in 2025 than we do right now. I've got a feeling there's going to be some friction, as you described. I think that's a good word. Yeah,
I don't want to say war. Friction and conflict, I think, is yesterday in Pasco, Washington, I showed a slide, and it's from the ag barometer out of Purdue and CME, and asking farmers in November, how likely do you think U.S. agriculture is at risk of a trade war that results in a significant decrease in U.S. agricultural exports? 32% neutral, 27% saying likely, and 15% saying very likely. And so let's just say those farmers are correct that is likely to happen. I think the high dollar is also a factor here. That's also, I think, sometimes a little bit under. People don't realize how expensive U.S. commodities are right now coming out of the U.S. because of that strong dollar. This kind of situation does sort of change some of the trade flows again. It doesn't mean the U.S. doesn't export. It just changes maybe the routes that they do take, which also impacts countries like Canada and probably out of South America.
Yeah, it'll change it, and then those changes they take time. I think a lot of the stuff that people are really worried about, and before we came on air, we kind of discussed a few of these, but they're issues, and they're issues that we need to pay attention to. But it's not like the calendar is going to hit January 20th, and the market's going to know all these answers. It's probably going to be 2026, 27 before we have the answer to some of these questions that are hanging out ahead of us.
Yeah, one of the things I've heard a lot from farmers over the course of, I would say, December, and I heard it yesterday again. People, we get to the Q&A part of the keynote, or afterwards, people come up and say, canola, for example. I don't know if I should be growing a lot of it because what if they get rid of seed oils in the U.S.? That's really going to impact. Maybe I shouldn't grow it.
Yeah,
a little too soon.
I would say yes. Number one, certain individuals have got to get installed into offices before that's an issue. Number two, even if there is a war on seed oils in the food sector in the U.S., it's not like it's going to be a snap of the finger and there's no more canola oil or soybean oil being used in any of our food products. That's a lengthy time period. Now, I will say, some of that talk is probably negative to public perception, and it probably is somewhat affecting a small sector of demand right now. But bear in mind, a large portion of our demand or demand increase over the last couple of years in the veg oil side of things has been from the energy markets and using the canola and the soybean oil in our renewable diesel plants that are popping up all over the place.
Okay, so is that under threat, do you think? Or could changes there that negatively impact that as a market for veg oils?
I don't think they're going to shut it down. I don't think it's going to go backwards. I think growth will probably slow. I know growth is going to slow in that sector, mainly right now just because of the indecisiveness. We've been waiting for 2 years for guidance from the Treasury Department, and I don't want to get on too much of a soapbox, but why the Treasury Department's got to give us guidance for biofuels is, I understand the issue. It just seems kind of a messed up system in the world we live in today. Like there should be a better way for these plants to kind of know what the rules of the game are going to be long before January 20th, 2025. We should have known those rules and those thoughts. So I don't get into all that. It's far above my pay grade. But I don't think, it's not going to go backwards. I don't think that's a threat. I just think that growth that maybe a lot of people were planning on as short as 20 months ago has definitely backed off considerably here in the last few months.
So what's the outlook for them for the go forward on veg oils if we're cutting back on some growth when it comes to things like biofuels, renewable diesel, and we've got a huge South America crop? How does all this pan out and impact some of the prices that we see at the farm gate, whether it's Canada or the U.S.?
Well, that's the concern. That's the concern on soybeans. A major financial institution came out just, I believe, yesterday saying they expect to see soybeans down in the $9 range. That picked up some traction and some people pretty nervous about it. That wouldn't be good for canola prices either if soybeans are trading down around $9. Now, that's one institution's thought process. It's something I'm concerned about, and we've got our growers, we're talking to them about ways to start laying into hedges on new crop beans. You're right. I'm going to kind of back up just a second and just kind of bring up that's another genie that's been out of the bottle for a long time. The first trade war did spark investment in South America and Brazil. And we talk about the length of time it takes for these types of changes to occur in the marketplace. There's a prime example. We entered into a trade war with China. What was that? 2017, 2018, when that kind of took full effect. So we're 5 years down the road from that, and now we're starting to see that investment that went away from the U.S. as far as purchasing U.S. soybeans and went into Brazil, right? And the Chinese invested heavily in infrastructure, and Brazil has responded by increasing acres, and that's not going to go backwards either. We're not going to see a drop in acres in South America. We're going to continue to see increases in acres planted, and all of those are headwinds, and that's why we need a unified, strong political presence here in the U.S. Hey, we're going to use this crop that we produce to create fuel, to power our vehicles. And the other thing I think we really need some spine is on the foreign used cooking oil coming in and taking up a lot of that market share.
Yeah, we've talked about that lots on the program here. And what is the definition of domestic feedstocks? Some arguing for continental feedstocks. Again, back to canola being used as a biofuel, right? That's that's one of those in the weeds policy things that we've been following very, very closely here at RealAg Radio, and still yet to be worked out.
Yeah, I mean, it's probably going to take some time, and like I said, we just need some people with some backbone in there that say this is, it's clearly not doing what it was intended to do. Yeah. And so we've got to step in there and get some of those things fixed.
Yeah, everyone's going to hear a lot about two things. One, use cooking oil out of China, and beef tallow coming out of Brazil. Those are the two things we're going to hear. We're going to hear a lot about here in 25 for sure. Hey, Tyler, thanks a lot for joining us here today on RealAg Radio. Really appreciate it.
You bet. Take care, Shaun.